Alrighty guys, welcome back. So as hopefully you have seen the past 2-3 videos of the live calls that I've been doing, I've been staying out of a lot of markets. And so what I will do here is I'm gonna kind of show when I get involved in the markets and why I get involved in the markets, and I'm actually going to refine. So this is going to be a little bit of a different video. It's going to be a little bit of market analysis, but also analyzing when to get in and when to not stay out of the markets. So one of my general rule of thumbs, and kind of what I'm going to be addressing this entire video, is the wickiness of a market. When to stay in and when to stay out. Do these wicks on the 4-hour, should I allow them to influence my getting in and getting out of a market? Like wick, like all this is shit, price action, shit, price action, shit, price action. Should I allow this to be a variable that I use in my decision making, or should I not? Like even if we look here, giant wick, probably was red news, whatever it might have been, it can be attributed to so many things. And so one thing that I found out is that lately, even on like US, here, we'll go to a market that I've traded, like NAS 100, yeah. For the longest time, I actually stayed out of this market. Now, I'm not so much addressing the actual price delivery chop like this. This is like, we already got this figured out. We know when to stay out. But more or less, I'm addressing this chop right here. Good. Wick. They're not that bad. Like, this is actually pretty okay. Pretty okay. It's not too bad. Bad. Like, would I want to get involved in this NAS or US 100 price action? Probably not. Wick. Now, if we step down to the hourly, let's see how the price action played out. And so I think what's important for me is to start using the lowers to kind of define this as, okay, on the 4-hour can only show so much resolution of price action. What I mean by that is, yeah, right here is very wicky. I'm actually going to replay it here just for a random example. Probably wouldn't ever trade any of this. Like, this is shit price action. But right here is very wicky. Let me play one candle forward. Should we have gotten involved? And right here on the 4-hour, you can't see anything besides wicks. Wick. Now let's look at the story on the lowers. Maybe there is some sort of narrative that we're not seeing. We're getting this back and forth. And even on the hourly, we're getting the wick. Cleans up very nicely. Nice price delivery. And so generally what I would do is I'd stay out of all this price action. But seeing that the 4-hour is so disconnected from the 1 minute or 5 minute entries that I'm taking right now, it's like, okay, I want to go back and see what contexts are good for us. So I'm gonna step down to some other market. Like silver's been okay. If we step down to we'll do silver. Why not? So looking at the silver market on the 4-hour, probably don't want to trade any of this. Don't want to trade, and you're done, right? What about the hourly? How clean is the hourly? Is there something worth following? Yeah, we had these giant wicks on the 4-hour. Is there potentially opportunities here on the hourly that we're kind of just glazing by? Because even here, like, there was so much opportunity on this market and on this market right here. So what I'll do is I'll jump down to the hourly, and then I'll start looking for my basic opportunities where I get involved. I'd probably honestly start looking at the market here. I was way too down in the range, giant wicks. Like, even wicks on the hourly would probably, are an indication for me to stay out. Wick. I took a loss here for absolutely no reason. I just wanted to take a random trade there. But even then, it was, what day was this? 9:40 in the morning. Like, let's go look at the 4-hour. Let's see if this was a valid trade for me, given my current rules. This was a while ago. Looking at the hourly. Yeah, this isn't half bad, but this is leading me away from that kind of price action. Look at this giant candle. We got the hourly. Let's go take a peek at the 20-minute. Okay, we got some time. Yeah, like, this wasn't a half bad entry right over this high, but wick. And that's actually what I've been testing. So I definitely know that the 20-minute wicks and chop on the 20-minute has a lot of influence over if we're going to have a successful trade, versus if we were to look at the hourly might not be so good at that. And so I'm trying to think of what would be a very good way to test this, like go into some 4-hour chop or like wiki, not even chop, a wiki 4-hour market condition and see if there's opportunity for us. Like not very wiki. Like this is wiki on the 4-hour. Jump down to the hourly. There's not a whole lot of opportunity here on the hourly. And even here where we did get that losing trade, wick. So I'm trying to think what would be a good way to do this because I'm not very organized right now looking at this market. Let me make sure we have electronic trading hours. Good. Yeah, I just gotta think because some of these markets I've just been staying out of just given the wickiness. But like even here, this is an okay market. Like you can see this is probably a very illiquid live cattle. If we go and look at the volume. What are we at? 2.3 thousand contracts. Yeah, like this isn't worth trading for me. Just because there's so few contracts. So probably stay out of this, but you come here and it's like 40,000 contracts. Okay. 127, definitely don't want to be trading oat futures. 127, yeah, 127 contracts a day. Like that's absolutely horrible. You're going to get slipped so bad. 134,000 contracts. That's very good. That means that your 15 contracts ain't going to really shift the market. So we could go ahead and probably close this. But look at the 4-hour, like here, this is actually a very, very good example that I'm going to use. Looking from here to here, look at the 4-hour. Wiki. I would have stayed out of this market, but there's probably very, very good opportunities here. So I'm going to replay just so we get rid of this extra stuff. Jumping down to the hourly should give us a completely different story. The wickiness, yeah, wickiness, stay out of this market, probably start looking at it right around here. Probably not touching it because of the 20-minute wickiness, so I'd wait for us to come back in. Entry over this high, probably a break even, yep. Entry potentially over this high, probably a break even. So as we're seeing, we step up to the hourly, there wasn't a whole lot of opportunity here for us. So let's continue looking. Looking at the 4-hour, not very wiki, like here, potential entries here, not very wiki. This is a market I'd consider looking at. Jumping down to the hourly, I mean, not a whole lot to do. So if anything, look at the market at this point. Nothing here, this point. Nothing, like potentially this point, and then very, very just weak of a market, and then this point. Looking at the 20. Entry over this high, probably a loss. No, I wouldn't take that high. It'd be this high, so it'd probably be a loss. Very, very wiki right at market open, so probably a loss. Nice little winner off of potentially this high or this high. You get to choose. I like this high, probably a nice little winner. So what I'm doing is I'm going back into examples. This isn't a very good market, I'm not gonna lie. Like let's go to your USD, which I know has been a lot wickier lately. To like the 4-hour, I've been staying out of this market, and I'll show you why. Yeah, so we're looking for longs off of this market, like shit price action all along here. Wick. Is there opportunity here for us? It's starting to clear up, but still the wicks. Like this is probably gonna continue for a little bit. Jumping down to the hourly, let's see if there's opportunity for us. Yeah, like horrible. This isn't something I'd touch, but maybe I'm missing out on something. Yeah, like probably not missing out on anything, to be honest. 20-minute, nothing. Entry right here, a break even for sure off of this candle. Entry right here, a nice little winner. Entry right here, a break even. So it's like I'm not losing a whole lot by staying out of context like these. Now it's a very weird thing to kind of like say because it's very subjective. The way I see the chop, someone else might be in it. So like clear, kind of choppy in here. Potentially, like I'll jump back down to the hourly. 4 hours, okay. But on the hourly here, nothing. Potentially start looking for something in here. So I'll place the line here. Nothing. Very wicky. Like I probably wouldn't even be touching this market, but there's still opportunity in it. And maybe it's one of my rules that's keeping me out. Like right here would have been a break-even trade. And then right here, probably a nice little winner. Yeah, we go. So I think what I should do is, I think the only thing I can do is backtest. Like go back into these markets and see under what circumstances we were, or yeah, what circumstances we were profitable in. And the only thing I should really focus on is not management or anything like that, but the chop that comes into this market. Like this is the 4 hour, potentially scalp sells in here, scalp sells in here. Don't touch. Start looking for longs in here, or sells in this case. Looking at that, 4 hours good. So what other market has been okay? I think gold has been pretty good. Looking at the 4 hour on the gold. Yeah, like what the hell was this? This was market close out? No. Yeah, market reopen. This electronic hours? Interesting. There we go. Okay, gold futures, electronic hours. This looks a lot better. Okay, very large wick. I stayed out of this entire market given these wicks on the 4 hour, right? But let's jump down to the hourly. Okay, and see here. Opportunity was presented right here. And then like all along on the 20. And then we'll just start here. How about that? So jump down to the 20. And then the first opportunity presented was off of this long. Now if we jump down to a 5 minute, I'm just gonna replay so I don't have to like scroll. Okay. First opportunity here. This was since the 19th. We're on the 23rd. So the past like 4 days or something. Opportunity was presented over this high. Nowhere really to place your stop. I'm going to throw an ATR on there to see the, my bad, not that one. I want like an actual chart on the bottom. I'm going to change the color just because it's so bad. I'll make it white. Okay, so ATR at this point was about 2.5. That seems like a reasonable ATR. And even then, like if you look at the 5 minute shop on these candles, buy stop over, which high was it? This one? Looking at, yeah, this probably would have been my stop. So you get stopped out, it goes a little bit, and you take a -1. Jump back up to the 20, continue looking for new validations. Nothing. This is your potential first entry. I wouldn't have taken it because we're too low within this range. This is your very, very first entry on the 5 minute. 5 minute buy stop over this high. Looking at a stop of about, if this thing will move, 1.3, under 1.3. Yeah, so this is a good entry. Nothing to manage to. First management would have been to this low at 3RR. Market goes. Continues. I probably would have managed somewhere about halfway, just given the size of this. Managed to here. Managed to these lows. Managed to these lows. And then 80% management to this, and then leave 20%. Okay. Update 80% of my position managed to the here. Hopefully we get taken out. Nope, not yet. Okay, we continue going. So 80% of my management is still on, or 100% technically, but I'll make this a little smaller. Okay, so we're still in this position. Okay, 80% of my position came off here, and then now go up to 20, and this is new management I'm actually playing around with. 20% of my position is going to be left to manage here. Maybe we survive, maybe not, and we get taken out. So this new management is in hopes that the extra 20% will make up for the commissions and whatnot, and then it goes. So maybe my management shouldn't have been so strict on there. So give me just 1 second. I know it's a very like weird topic or hard to phrase, but like look at this 4 hour. 4 hour on this gold, I wouldn't have been touching. But now as I do more and more testing, I'm starting to realize there's so much opportunity. Like none of this gold I've been touching. Haven't been touching it. Wick. But as you jump down into the hourly, I'm going to draw a line even here. I haven't been touching this because of the wickiness on the 4 hour. But jump down to the hourly, and it tells you the story with a little bit more depth. Okay, yeah, there is some wickiness to it, but it's not bad at all. At all. Good opportunity. This is the hourly, so good opportunity. Here, I'm going to highlight them again. Same exercise we did. Very, very bad price delivery here. Probably wouldn't have wanted to touch anything here. So let's jump down to the 20. I'm going to replay here. Jump down to the, look at the 4 hour. 4 hour chart, not really touching this price action probably until around here. Very, very wicky. Jump down to the hourly. This is where I'd probably start looking at the chart again. Very wicky on the hourly. It's not too bad. Like back here, but yeah, like potentially start looking at this market. Jump down to a 20-minute. See what the story is telling us. Okay, opportunity was presented for me over this high. Probably didn't even get tapped in. I was at my buy stop just slightly higher. First entry would have been over this high. Would have been likely a break even. We can jump down lower if we want. Right here. So buy stop over this high would have been something like this. Low somewhere around here. Nothing to manage to. Yeah, there's just probably a break even here. Now jump back up to 20-minute. 20-minute, we looked at this opportunity, break even. No other opportunity, falls back down. Potential opportunity over this high. Probably would have been a loss. We'll just mark it as a loss. And then we continue going. No opportunity. Market kind of goes here without you. That's okay. Nothing. Waiting for money to come in. Okay, and money comes in. So like here, your only opportunity, this was probably NFP, red news. So no entry here for me. Like this would have been your only entry. So now what I'd be waiting is for a 20-minute stage one, several hours after red news. Now it is a little wicky on the hourly, on the 20-minute, my bad. So just give this market time. I want to see it baseline a little bit more. And hopefully it doesn't fall. Only opportunity was over this high, so a potential loss here. Yeah, we'll just mark that as a loss. Okay, waiting for that hourly to shape back up. Money comes in on the hourly, looking for 20-minute longs in here. Even though, like, look at this 4 hour. It's pretty bad condition. Wick. But stepping into the hourly price action is somewhat smooth. It's very like sporadic. You know, you get flat and then sudden movement. And if you can get position here, great. Flat, like weird chop, sudden movement. Flat, hopefully sudden movement. You're getting these waves of money coming in. So looking at the hourly and the 20-minute, the only entry I see right here for me is over this high. Assuming there's no red news, because yeah, 20-minute is a little choppy. Wick. But maybe my, like even the 5-minute, this is absolute horrible chop. Your only entry would have been over this high and this low. I probably wouldn't have entered this. Given the choppiness of the market, you're probably going to get tapped out here. Just like that. So probably would have been a BE for me regardless, but even then it's not worth it. So definitely going to start prioritizing the chop on the 5 minute on the lowers, because the chop on the 4 hour, maybe even 1 hour chop. And when I say chop, I mean like candlestick chop, price delivery, not so much like the actual ranging. Like we already have this part down where we get this kind of chop. This is very clean now. What I'm talking about is the actual wicks. That's effectively all I'm looking at. So looking at the 4 hour. 4 hour is delivering, but very choppy. Hourly is delivering very clean, actually. 20 minute, we're too extended. Probably don't want to touch this market. So we take our break even and we allow this market to continue playing. Let's look at the hourly. Hourly, we're kind of anticipating for another buildup here, something like that. 4 hour is good, hourly is okay, 20 minute, yeah. So I'm just kind of waiting for this buildup. On the 20 minute, there's no valid entry for me. So I'm gonna wait for more sideways. Okay, and potential, nope. The only entry I saw was over this high. And even then, yeah, I probably would have taken this. So even another loss, throw another loss in there, okay? And hourly just fails down. Hourly starts building back up, probably on this candle, maybe. Let's go, sorry about that. Let's go take a look here. Looking at the 4 hour. 4 hour is pretty bad, like for me, for the way I've been judging the market. Let's go take a look. Why? Wick, 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 smaller wicks, indecision in the market. But what I'm learning is this is actually keeping me out of a lot of opportunity here, because the 4 hour is so disconnected. Like the hourly is delivering perfectly. Money is coming in, pushing up higher. 20 minute, let's see if we get any opportunities here. There's nothing, so give this market time. Okay, money comes in and it's okay. Looking at the 4 hour, the hourly is once again kind of wicky. Like I don't like it so much. Maybe just because I've gotten so used to perfectly delivering markets. Bad. Like wick. Is this a market that I would want to get in on? Probably not. I'm just kind of thinking, because it's like very, very wicky. So yeah, this is probably a market I would stay out of, although everything else is shaping up very, very nicely. Like now you jumped onto the 5 minute, look at the 5 minute price delivery. Very smooth, very clean. The only thing that's kind of drawing me away are these few candles. But even then, it's like that chop that we saw in the 20 minute on the 5 minute reflects as very clean price delivery, or cleaner, I guess we could say. So 5 minute entry here. Let's see what happened if we got tapped in first, or I hope we have the data. Okay, maybe not. Hello? Oh, fucker. Where'd my data go? I am so confused. Okay, yeah, we're looking at this. Dude, I don't even know where we were at. Okay, well, trading view is so awesome, isn't it? We're on like a 20 minute and then looking for an entry. We're somewhere in here. Yeah, guys, I couldn't tell you. Let's step down to 20, see if we maybe spot it. Nothing. we're looking at these entries. Was it this one? I don't think so. No. Oh, it might have been this one right here. Maybe. Maybe. Yeah, I don't think so. No. Looked a little different than that. Dang, that was a very good example too. I wanted to see how that one played out. Huh. Interesting. Yeah, that's a bummer. That would have been a very good analytical trade. Definitely wasn't this one, was it? Oh shit, it was this trade. No fucking shot. Okay, well, this was our very nice moving trade. Yeah, so I jumped onto the 1 minute. Oh, fuck off. Fucking FX replay or trading view sometimes. They need, I mean, I pay so much for data for them to not have it, you know? So I don't know if it taps us in first and then takes us out, or I don't know what happens here because I can't jump down to the 1 minute. But we're going to assume that we got in on this at a good price. Management would have gone something like manage to here, manage to here, manage 80% of my position to about here. And then if this would have pushed higher, I would have managed to here, but no. Probably take 80% of my position off right here. And then leave 20% running at break even still, okay? So the rest of my position is still at break even. And we take a break even on the remaining 20%. Okay. Probably just tap out or like close the position at this point. Maybe. Nope, we're still in it. So looking at the 20 minute now, 20 minute management is going to go something like this. Close the remaining 20% of my position if we get here. Close the other remaining 20% of my position, or the remaining percent if we're still here. Close the extra 20% if we're still here. Close the other 20% if we're still here. And we're out. So 80% of my position would have been managed to 8.5. And then the rest, so we can actually do the math, 8.5. Here, I'll do it on my phone. We'll do 8.5 times 0.8 plus the rest 20% of the position is going to be managed at 13.43, and that's going to be 20%. So we would have made a total of 9 RR. Versus if I would have closed here, we only secure 8.5. Now we are doing 9.5. So an extra RR by changing a little bit of your management like that. Now, continuing to look at this market, let's see if other opportunities presented themselves. As this was playing out, let's go take a peek at the hourly at this very given point. Yeah. So we're still good for longs right over this high. This was probably red news or something. I couldn't tell you what. Another reentry here. Another reentry here. Potential. Another reentry here. Potential. And then waiting for this one to close, but potential reentry on this one. Probably red news. Yeah, 620 NFP, probably red news. So coming back down on the 5 minute, let's see what our entries would have looked like. Would have been a buy stop over this high, very choppy, but probably would have been a loss here. Entry over this high with a low, probably here. I don't know if that would have been a valid trade. Looking at a ATR of about 1.0. Yeah, too big of a stop loss, so no entry here. Another entry would have been, we're looking at ATR right here is going to be like 1.5. So a high of this to like 1.0, probably something like that. Yep, would have been a nice little runner, secure maybe 3 RR. Another entry buy stop right over this high. ATR of, at this given point in time, 1.7. So I would have stayed around 0.9. Good. And then here, I don't even think I would have entered this given the NFP news or whatever. Looking at the hourly, coming back into MAs or whatever. So I'm going to wait for price to get bought back up. There we go. 20-minute potential validations. Now this is red news, so probably want to stay out of it. But potential entry here, I definitely wouldn't have taken it. Gonna let the market go and then look for re-entries. Only re-entry I see is right at this high. Assuming we get some sort of delivery here. Entry would have looked something like this. Low, we're looking at an ATR of about 2.4. So I'd want to stay around 1.2-ish. Something like this. Doesn't have to be too exact. Okay. And definitely would have been a potential break even for me. Yep, break even trade for me. Nothing to do. Step back up to the 20, look for new validations. And if we take a look at the 4 hour actually cleaned up very nicely. Very, very nicely. So probably good market here. But let's go into more of a choppy market. For example, this on the 4 hour. Okay, so as we look at this market, this isn't something I would trade on my live account. Wick. Now, are there opportunities here? Let's step down to the hourly. The 4 hour can only show so much. Hourly. Wick. Like wicks. Very, very shit market. Okay, so where we're going to start is here. And then we'll just backtest from here. So go into the 20-minute. Hopefully we have this data. Yeah. So go into the 20-minute. First entry. Here, let me move this out the way. First entry is probably going to be this one. Beautiful loss. This one. Beautiful loss. Not this one. Potentially this one. Beautiful loss. This one. Break even. This one. Good entry. Probably securing, just on a random guess, ATR of 5.3. So yep, just about there. Probably securing random guess of like 4.5. And then nothing. No re-entry here for me, given the wickiness of this market. Nothing. Potential re-entry right here. But I probably wouldn't have taken it given the wickiness on the 20-minute. 20-minute starts falling back down. Let's take a peek at what this hourly looked like at this given point in time. Yeah, so not touching this market again, the hourly. Potentially until like right around here. So stepping back down to the 20. However that might look. So 20, potential re-entry loss here. Re-entry here. This will probably a break even. Wick, probably wouldn't have taken this, but good long over this high. Phenomenal long over this high. Nothing here. Phenomenal long over this high. Probably a stop out or very lucky if you stay in the position. Very, very wicky of a market. Probably I wouldn't even have taken these given the wickiness. Wick, especially on the 20-minute. So probably staying out of this market for a little bit. Looking at the hourly. Hourly isn't too bad. Like, yeah, you get your bad wicks, but like this market condition, let's go take a peek at it. Before it straightens out, let's look at the 4 hour. 4 hour, we're looking at wick. Jumping down to the hourly, we're looking at wick. Yeah, I like personally, I don't want to trade this, but the first time I'd probably look at this market is right on these bullish pushes right here. So maybe don't judge the 4 hour so badly. Like, yeah, even, what was it, today or yesterday or something? I was looking at a market and I stayed out of it, just given the wickiness of it. Like the 20-minute, I can't touch this market. Just, it's too shitty. And there's no entry here for me. So what I'll do is I'm gonna close all this. Let's go to live price. I know it's a weird concept to convey, but once you actually hit the markets and you see shit like this, you'll see exactly what I mean. Wick. Is this something you want to trade? Like, be honest with yourself. Look at the hourly. Hourly, wick. Like, yes, you could get your longs in here. Wick, giant wick. I don't know. Let's go take a peek. Like on this bullish push right here, like live, this is definitely something I would have looked at. On that hourly, yeah, like right here on these bullish pushes right here. So let's take a peek at the 20 and see what that looked like at the time. See if there was an entry for me. Good entry. Break even. Step back up to hourly or 20 minute. Nah, we'll do hourly. 4 hour, nothing to do. Giant wicks on the 4 hour, probably don't want to touch this market. Don't want to touch and wait for money to come in. Money comes in today. Very cleanly. 4 hour, good. Hourly, good. 20 minute. Oh yeah, I placed like a fake little trade earlier to see what would happen. Entry over here, stopped out. Entry, I'd probably wait for some more bullishness. Nothing. Entry right here, break even. And I shouldn't have taken this. Look at the wickiness on the 20 minute. Wick. Oh, and my biggest mistake. I don't trade soybean futures or whatever, but my biggest mistake was market close like as soon as I placed my order. And it was a fake order, so it didn't matter. But even then, we're 20 minute wickiness here. This would have been a loss if I would have taken it. This would have been a loss or break even if I would have taken it. So it's like on the 4 hour. Oh, my bad. We're looking at gold. On the 4 hour, it's not too bad of a market, delivering very nicely. Hourly, it's okay of a market. You know, under MAs, got bought up very nicely. Back at MAs, hopefully starting to get bought up very nicely again. Step down to the 20 minute. Now there's so many reasons for me to stay out of this market. The 4 hour don't reflect the illiquidity in this market, right? Illiquid. So now as the 20 minute is making, ooh, I mean, definitely not something I would personally take, but very, very good. But I stop right here. Why am I not taking this? Illiquidity, right? Market's about to close here in a little bit. We can see actually when. Yeah, market is closed. It'll open up in an hour. So this is where we left off at. Good opportunities, but, you know, market close. So 4 hour. Oh, my bad. 4 hour. Look at this shit market. Okay. Let's see if there was opportunity here for us. This is actually very good. Jumping down to the hourly, market fell back down. Let's look at price on the 4 hour as we got back up. So like right on this candle is when I start looking at the market again. Yep, hourly good, 20 minute. So now this is where I'd step down to a 20 minute and look for longs. No longs. Potential long over this high, too weak. So I would have given it more time. Market probably falls back down. Start looking at the market at this point. Step down to the 20. 20 minute longs would have come in. Nope. Right here. Break even. Long potentially here or here. This would have been, let's go take a look on this right here. On the 5 minute, this would have been a okay entry, looking at a stop ATR of like 0.0038 or 0.38. So this is your average stop. So we could do something like 3.8 divided by 2, like 1.5. Yeah, this would have been your entry. Probably managed to about here. 80% of your position taken out. The rest actually taken out at break even. Just barely stopped out. That's shit. Absolute shit. Gold though. Here, I'm going to even remove silver off my list. Gold though has been pushing higher. Hourly, hopefully this next session we get some nice pushes up. But even looking at the 20 minute illiquidity or like chop, candle wick chop. Wick. Illiquid, just kind of doing its own thing. Still continuing the same pattern. Like probably not something I want to touch here for a little bit. Let's look at, I know we haven't touched Forex here for a little bit, but let's go take a peek at that. Daily analysis pushing up higher, whatever that might be. Looking at the 4 hour, once again, okay. This is actually a good example, good that I'm looking at this. Wick, very liquid, slow moving. Let's take a peek at the hourly. Hourly, same thing. Wick. Don't want to get involved in here. Okay, that's understandable. But as soon as money comes in, right here, probably do want to start messing around with it. And then money falls out of it, chop. Maybe start looking at it here again. And then here again. Like we're just throwing out areas that I would probably start looking at the market. Entry here, too wicky. Probably wouldn't have entered any of this. Too wicky. On the 20-minute entry here, this would have been your potential first winner. And entry over, nope, not even that high. Entry over this high. Probably a break even on there too. So it's just like, I don't know, guys. I personally don't want to trade this. 4 hour on GBP USD, very wicky. Look at this shit. Wick. But this is on the 4 hour. Let's go see what the hourly narrative is telling us. It's actually telling us a very similar story. Like, what in the world are these wicks? You know? We're about to form another one because of a rollover here, so. Okay. But as money comes back in, this is at 7 p.m. my time, so like 9 p.m. New York, as the markets reopen, money comes back in. Several hours later, let's go take a look at the, so hourly market I wouldn't be looking at it probably till about here. Let's take a look at the 20-minute. No entry. First entry would have been here. No entry. First, secondary entry would have been here, but probably a break even. Looking at the hourly, probably around here. Let's see if this is a valid market for us. Yeah, money comes in. Entry right over this high, probably a 6.2 versus 8. Nope, probably would have been a loss in there. I don't know. It's just probably don't trade this shit. It's that straightforward. There was another market I wanted to take a look at. I think it was NAS 100. Yeah. Now, kind of with the understanding that we've put into this so far, it's like, okay, 4 hour, wick. Very shit on the 4 hour. I ain't even gonna lie, like very bad. But it's a very, very strict metric because no matter where you go on NAS, this is the reason why I'm testing this. No matter where you go on NAS, wick. Can go back even further. Wick. And this is the 4 hour, right? Even to the best of context, like maybe not as wicky here, wick. And so if I go back and look at the most favorable context for my system, this is where I did a lot of back testing back in the day. Like you can see at what points I was identifying the system as profitable or not profitable. There's so much money in here. Very, very clean moves. Very clean moves. Shit. I think this is back in the day when I was working with my 15-minute system. But even then, jumping down to the hourly here. Oh man, how should I do this? Hopefully we have hourly data. Yeah. Jumping down to the hourly, it's like, okay, very shit because of whatever might have been here. Clears up. Good opportunity here. Kind of shit. Maybe opportunity here. Kind of shit. Maybe opportunity here. Maybe opportunity here. And then opportunity somewhere in here. And then some more in here. Fails back down. Very, very wicky, especially on the hourly. So all market, just so we can take a look at the 20-minute here, but probably very, very bad. Hourly shaping back up probably around here. Very, very shit, but all this is actually very, very good opportunity. So let's step down to the 20-minute, which might be kind of hectic if we do have data, hopefully. There we go. So I'll actually just replay to here. Let's go take a look here. 20-minute entry, right over this high. Which high is it? Yeah, this high. So yeah, this would have been a good entry. Probably run it up to like 5-6R. No entry here, given the chop on the 20-minute. No entry here, given the chop and giant wick. Probably red news. Nothing here either. Giant candle. Like this was the first opportunity, but I wouldn't have taken it given that giant candle. Entry right over this high probably would have been a loss. Or actually, no, you would have just barely made it, depending on how you manage. And then hold till, yeah, I probably would have closed at around this time. Anywhere in here probably would have closed. 20-minute, potential loss in here. Good entry, ride it all the way up. Secondary good entry, ride it all the way up. Nothing in here. Nothing in here. Money starts coming back into the market. No entry. No entry. First entry, probably a loss. No real entries here. And then still waiting. Good entry here, probably a loss. First entry here, probably a break even. Secondary entry here, probably a small win. Yep, nice little winner there. But like you guys sometimes underestimate how big these wins are. Even on like a 5-minute, if I were to jump down to 5-minute, manage to here 80%, leave the other 20% running to probably around here. Wait for the 20-minute to line back up. We'll jump back up to the hourly, see what's going on here. And money starts to fail. Big major flush, money comes back in. Wait for the 20-minute entry validations here. Maybe we get something, maybe we don't. Potential entry over this high, nothing. Give it more time. Okay, it's setting up for something. If we get bought back up, first entry over this high. Loss. Very illiquid, red news, whatever it might be. Money comes in. Gonna wait for stage 1 here. Whoa. There we go. Secondary entry. No entry, no entry. This is like your very, very first entry right here. Probably a break even. Nope. And that's your little winner. My bad. But yeah. Whoa, what happened to AT&T? What? Okay. Well, I guess AT&T pumped. Here, let me turn off extended market hours. Or turn on, I guess we could say. Okay. So, yeah, guys, I'm pretty tired. I ain't gonna lie. I've been at this for a long, long time now. But, yeah, that's kind of, I know it's a very kind of weird thing to talk about or like put into words. Just because I've been doing it for so long, I know what looks good and what doesn't. In a market condition like this on the 4 hours kind of shit, I'd be staying out of it. But the moment you jump down to the hourly, it's like, okay, that's not too bad. Wicks here and there. Money's hopefully going to start coming in. And even here, like even though the hourly is quite shit, potential loss here, probably a break even here. Yeah, no. even then, even then, it's still pretty bad. So I'm going to continue testing. Next video I put out is probably going to be another back test. Actually testing, not invalidating entries due to the 4 hour, but maybe removing that variable and changing it to a 20-minute, 5-minute. The thing that is for sure is 5-minute and 20-minute are very, very good indications of a market that's probably going to fail. Like if you have a good analysis and you're like, this is what's going to happen. One of my biggest indications that the market's going to fail to some extent is wickiness on the hourly. Wick. Like, I'm going to replay here. This might be another good example. Let's go up to the 4 hour and see what it looks like. 4 hour actually is shit here, right? I probably wouldn't be trading any of this until this candle right here. Jump up to the hourly. Very, very shit. Money comes in on the hourly. Go to the 20-minute. Wait for some sort of stage 1. And money goes without you. First entry is going to be right over this high. Get tapped in, get tapped out. Okay, secondary entry is going to be potentially over this high. Get tapped in, get tapped out. This is god fucking awful price action. The only other entry is over this high, but I probably wouldn't have taken it after a couple losses there. So another entry potentially over this high. Let's see. Nope. Secondary or another entry over this high. Maybe. Nope. I gotta love this shit. Another entry over this high. Get tapped in, break even, nothing to do. Another entry over this high, get tapped in, take a loss, or a break even depending on how you manage. And yeah, I mean, like you're in on this, but depending on how you manage, looking at the 5-minute, probably would have managed to somewhere in here, gotten taken out, and then left the rest of my position running at this SL right here, taken out as well, so it doesn't matter. So yeah, I'm going to continue testing that shit, but as of right now, I'm still going to continue trading the way I do. I'd rather stay out of more markets and more entries than potentially getting involved in contexts that I know aren't going to be very well aligned with what I'm looking for. So even here on NQ, hourly is shit. Wick. Even though we're getting nice deliveries, let's step down to the 20-minute. I mean, I guess if you can pinpoint, like this would have been my entry. And then nothing. Just shit. Absolute dog shit. Like maybe over this high. But even then, no. I know, guys, it's kind of complicated to explain, but very clean, very clean. So yeah, that's gonna do it for this video. I don't know how long I've been recording, but I'm gonna continue doing tests myself, and then as soon as I come up with some very good analysis or something that I've really noticed in the market, I just kind of wanted to put this out there for other traders to realize how you can add to your edge, but how you can also really take away from it. So very, very good stuff. And let's go take a look here. I'm wondering why my ATR here is a little different than my ATR here. Probably the length of it. What if we make this 12? Huh. Okay, I'll look into it. I don't know why my ATR is different. Maybe 9. Oh, it's RMA. There we go, 104, 105. Okay, so it looks like it was 12 ATR. 12 or 14. We'll try 14. 106. Yeah, it's going to be like a 12 ATR. Good. I like to have this chart just so when I'm back testing, I can actually go back and look at the ATR values and all that. But yeah, we're at like 105. So good stuff. And yeah, so peace out.